Goldman Sachs puts the entire global market for humanoid robots at $38 billion. That is, the whole market, in 2035. One American company that has shipped about 150 robots is already worth $39 billion. And on August 6th, a Chinese company that ships 37 times more of them finally had to open its books. The company is Unitree Robotics, out of Hangzhou. On August 6th, it priced its shares on Shanghai's STAR Market at 150.8 yuan, about $22 a share, raising roughly $904 million at a valuation near $9 billion. It is the first humanoid robot maker anywhere to trade publicly. Bloomberg reported that the retail tranche was subscribed 5,526 times over. An ordinary buyer's odds of getting a single share were about 0.02%. And that is what makes this different. A listing forces disclosure. For the first time, an actual humanoid robot business had to show what it earns. Unitree's 2025 revenue was 1.7 billion yuan, about $250 million, up from 57 million the year before. Net profit, 590.8 million yuan, roughly $87 million. Gross margins near 60%. And it shipped about 5,500 humanoid robots, which is close to 1 out of every 3 sold anywhere on Earth. This is a robot company that makes money. Now, the comparison. Figure AI, based in San Jose, is the most valuable humanoid robot company in the United States. On September 16, 2025, it closed more than $1 billion in Series C funding at a $39 billion post-money valuation. 18 months earlier, the same company had been worth $2.6 billion. That is roughly a 15-fold markup in a year and a half. Its backers include NVIDIA, Brookfield, Intel Capital, Qualcomm, Salesforce, and T-Mobile. Figure shipped somewhere around 150 robots in 2025. It does not publish revenue because it does not have to. Here is the problem that creates. Unitree listed at about 219 times its earnings and 36 times its sales. Those are expensive numbers by any standard, but they are numbers. There is something underneath them to divide by. Figure's valuation has no denominator at all. The analysts who track it estimate its 2026 recurring revenue lands somewhere in the low tens of millions of dollars. Set against $39 billion, that is not a multiple. That is a promise with a price tag on it. And a great many people are buying that promise. Crunchbase counts $18.8 billion into robotics startups so far this year. That is more than the $15 billion raised in all of 2025, and more than the previous record year of 2021. Neuro Robotics raised up to $1.4 billion at a $7 billion valuation. Apptronik took $935 million at more than 5.5. In 2023, there was exactly one humanoid platform you could actually buy. Today, there are 12. But look at what is happening to the product itself. In 2023, the average Unitree humanoid sold for about 593,000 yuan, $85,000. By 2025, that average was 167,000 yuan, $25,000. The price of the thing being sold fell by roughly 70% in 2 years, while the price of the companies making it went the other way. Falling prices are wonderful if you are buying a robot. They are brutal if you are holding the margin. The clearest example of the distance between the story and the shipment is Tesla. Optimus was announced in 2021. Every production target since has slipped. A 2025 goal of roughly 5,000 units produced, hundreds. Musk has described the deployed units as, quote, primarily for learning, not productive tasks. So the most watched humanoid program on Earth, attached to a company worth more than $1 trillion, has put fewer robots into the world than a Hangzhou firm that most American investors could not have named a year ago. So put the two ledgers side by side. Unitree, 5,500 robots shipped, $250 million of revenue, $87 million of profit, 60% margins. The market's price for all of that? $9 billion. Figure, about 150 robots. Revenue it does not disclose. No profit, and a private mark of $39 billion. 4 times the price. 1/37th of the robots. And figure alone, on paper, is worth more than Goldman Sachs believes every humanoid robot on this planet will be worth in 2035. Now, the uncomfortable part. Because cheap is the wrong word for any of this. 219 times earnings is not a bargain. It is one of the more expensive listings on the Shanghai Exchange. About 1/5 of Unitree's offering went to strategic buyers, including investment arms tied to China National Petroleum, China Southern Power Grid, and China Telecom. A Shanghai listing carries a political discount that a San Jose cap table does not. Both of these numbers are bets on a future that has not arrived yet. Only one of them shows its work. What actually changed on August 6th is smaller than a bubble and more permanent. Until that morning, nobody could mark a humanoid robot company to market, because no humanoid robot company traded. Every private valuation was an argument between a founder and a fund. Now, there is a printed number on a screen in Shanghai, updating every trading day, attached to the only humanoid company on Earth that publishes what it earns. Every investor holding private robot paper now has something they can be asked about at the next quarterly meeting. The robots are real. Unitree's profit is real. The demand is real enough that 9.8 million retail accounts fought over a fraction of a share each. What is not yet real is the distance between $9 billion and 39. One of those numbers was set by a market. The other was set by a room. Markets get to change their minds. If you want the money followed, subscribe.